America is roaring back.
But not quite enough to meet President Donald Trump's target for last year's final quarter. The US economy grew by 2.6%, losing its momentum from the third quarter and missing analyst estimates. But economists aren't worried about its long-term growth prospects. For 2017, the economy grew 2.3%, an acceleration from the 1.5% logged in 2016. Analysts say a weaker dollar and rising oil prices could spur US growth to meet Donald Trump's 3% target for this year. Meanwhile, it was a slightly different picture across the pond. The British economy grew by 0.5% in the last quarter, beating estimates and recording its fastest pace of growth for 2017. But the bigger picture shows an uneven pace of expansion. Last year, UK's economy grew 1.8% compared with 1.9% in 2016. With Brexit threatening the European Union's position as its biggest trading partner, Britain has actively begun looking for suitors to fill that gap. That includes cozying up to the US, despite opposing Trump's view on globalization.
We'll be continuing to push our case for global free trade, with Britain acting as a champion of free trade as we leave the European Union and take up our independent seat on the WTO.
UK Prime Minister Theresa May and Trump met on the sidelines of the World Economic Forum in Davos. Trump praised May's efforts in preparing the country for Brexit and pledged to boost Anglo-American trade.
The trade concepts and discussions really, I think I could say most importantly, that will be taking place, are going to lead to tremendous increases in trade between our two countries, which is great for both in terms of jobs.
Given the uncertainties of Brexit, the UK could be banking on trade with the world's biggest economy to make sure it isn't left out of any recovery in global growth. Laila Humairah, TRT World.
Let's get more on this now with Mike Ingram in London. He's Chief Market Strategist at financial services company WH Ireland. Welcome to Money Talks as always, Mike. Great to have you. So disappointing growth figures from the US, the UK looking surprisingly good. How are investors playing these two stories?
Yeah, good to be with you. Well, I would actually say first to the US, I think the headline number was indeed weaker than expected. Market was expecting a 3% annualized growth rate. It came in at 2.6. But if you scratch beneath the surface, actually, you know, if you look at final domestic demand, it was 4.4%. Consumers still looking good. Really, it was a net trade position and also an inventory drawdown, which actually helped to lower that headline. So overall, you'd have to say that the US economy is actually still showing decent domestic momentum. On the UK side, the headline number again was better than expected. They were expecting 0.4, as you quite rightly mentioned in your preamble. It came at 0.5 for the quarter. We don't have a great deal of information there, but again, one suspects that it's largely exports that have boosted it. Obviously, you mentioned the external environment is looking pretty strong, particularly in the European Union, which is our major trading partner, and I also suspect that manufacturing more generally has contributed, as has government spending. So the bottom line is, I think that the market is unsure as whether or not we should be perhaps even moving into the US, because what's happened, we've seen the dollar down 10%, dollar index down 10% last year. It's been hammered so far this year. It's down another 3%. Most institutions have been underweight US equities. Right. They've been overweight Europe and so forth. So people are thinking, well, do you know what? Have we taken all that pain on the dollar? Is now the time to step back in? It doesn't help, of course, when we've had seeming contradictory, signals from, Treasury Secretary Steve Mnuchin, and again today with Donald Trump into what they want to see going forward from the dollar. Indeed, in a broader effect, what they should be seeing, want to see from trade policy. So confusion reigns. The only thing that the market is sure about at the moment in terms of their call is whether they should be betting on higher volatility. Okay. And actually, if you look at that market, they're placing their bets.
Going to have to leave it there. We are running out of time. Thank you so much indeed. Mike Ingram from WH Ireland there.